You're deploying nearly record amounts of money, but the market seem to have a narrative that they are trying to hold on to. What are you using as your story to put money to work?
So what I would say about putting money to work is we're trying to be as thematic as possible in deploying capital. That in an environment where the economy is being transformed by technology, how can you see the best neighborhoods, the areas that'll benefit from what's happening? And so for us, we've done a lot in technology and life sciences, global logistics. We had huge appreciation in the quarter in our portfolio, and a lot of that was in those areas. Looking forward, and certainly in the first quarter, we've been doing a lot around the COVID recovery play. So we've invested in a bunch of travel-related businesses we did a U.S. hotel transaction, Japanese hotels, a U.K. holiday park business, a private aviation company. That's an area we're excited about. We're excited about what's happening in sustainability, and we did a number of deals on companies in Europe and the U.S., helping build out the electrical grid, help do environmental remediation. And then I'd add housing is another area where we have a bunch of enthusiasm, and we've done deals in the U.S., both in rental and for single-family housing as well. And I would say overall that for our investors, they're benefiting from this very strong thematic push, and you can see it in our numbers for the quarter.
So what about inflation? At what point does inflation start to throw a wrench in some of the investing that we're seeing out there?
So I think that really is the big question. That's the concern that exists. And you see it. Steel and lumber prices are up double digits. Used cars are up 25% year on year. We're beginning to see pressure on wages in areas like hotels and theme parks, hiring workers getting harder. And so I think that's something all investors need to take into account. I think there's some risk on valuation multiples. And so what we're trying to do, again, is buy faster growing businesses in good neighborhoods that can, help outrun some of those potential multiple pressures. That's really been the focus for us. And for us as an investing firm, delivering great returns is what it's all about. It's why we continue to raise large amounts of capital, because we've delivered for our customers.
Now you've already hit, record AUM right now. But how fast, John, can you get to $1 trillion?
Well, I don't really think about how fast we can get to a certain number. What I think about is how good of a job can we do deploying capital? And we're coming off 2 great quarters. We're really investing, I think, across the firm super effectively. Credit has seen a 40% increase in its private assets over the last year. Really great performance in secondaries and infrastructure, real estate, private equity, tactical opportunities. If we do a great job, it's a pretty simple business in a sense. Steve Schwarzman likes to say, we're similar to a restaurant. If we serve good food, the customers come back, they'll order more, they'll try different things on the menu. That's been the story for us for 35 years. If we deliver great results, then we'll serve more and more customers. And today that's broadening out beyond just institutions to insurance companies and individual investors. So I feel very confident, frankly, more confident than I've ever felt about the future of our firm.